I'm glad many of you could join us for that. This is part due of the market correction situation. Okay, we had a massive sell-off with the China crisis, which brought us all the way down to the number that we said we would get to, which was key support, right around the 90 area on the QQQ. So I want you to see, there's the curl, there's the chop, 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 there's the drop, okay, to support. Now the moving averages, we have the 200, we have the 100. We said yesterday that we were opening right at the 200 period moving average. We ran and hit into the 100 period moving average on the Fed announcement, and then we sold off like a rock thereafter. We are now hitting into the nestled moving averages, which should be the chop again. Okay, so there should be some chop in here, meaning a bounce, maybe some chop down. We shall see. If we pierce right through it, okay, cutting through it like a hot knife through butter, okay, we will go down to 102. And then from there to 150. Okay, so those are the two key levels, 102, 150, if we can get through those clustered moving averages. Now on the SPY, we have a different story. On the SPY, when we zoom out, the 100 and the 200 are crossing over, okay? We came right down to the target, which we called way back in June. We said that our price target on the S&P was going to be around 182.50. It was that low. Now, we called it in June, which was right here, and the market did sell off. We had a class called the Sell in June class. Sell in June and go away, okay? And we did make one more rally before the sell in June was over, but you know, obviously you can't ever pick tops or bottoms 100% accurately. You just got to get the general area right, okay? And that was one of the premises of our class. Now we've made a massive bear flag. And guys, you who have been here with me know that I've been talking about the massive bear flag. If we go red, we short. Okay, if we go red, we short. And sure enough, that's exactly what happened. Now, we didn't make the early drop. We waited all the way to the FOMC before we dropped. Okay, needless to say, we dropped. All right, so we are triggering down on this bear flag. By the way, guys, you know, I'm a day trader, so, you know, I don't generally hold too much, you know, going into things. So I mean, I've made money every day for the most part, but, you know, I pretty much just wait to play the next day. I don't try to make too much on the big moves. My partner, Michael Parnas, with his options trader, has made some incredible calls, AMBA, okay, we called Ambia, which was like a, you know, pretty much like a 30-point drop, okay, which is just incredible. We've had a couple of other great calls, like on Disney before, right after Disney's earnings. There was the big gap down on earnings, and then there's the big 15-point drop on Disney. Guys, I think we're going back down to these lows. So on Disney, you got 91.50, okay? Another one that I called as a very bearish play was FedEx. I think FedEx could fall down to 132. The other one that I was very bearish on, which might actually not be so bearish anymore because it's kind of a defensive company, but we should definitely watch it because it's been acting very bearishly, is Procter Gamble. And guys, last but not least, one of the calls that we did was about banks. Who was the most negatively affected by all of this interest rate craziness? Okay, it's the banks. Everybody was buying banks, thinking that banks were going to go up based on in a rising interest rate environment. And the Fed said yesterday, guys, we're not that bullish. Okay, we're not ready to raise rates just yet. Okay, now one guy dissented and thought that it should have been a quarter basis point hike. But now a lot of the investment that was baked into the banks having a rising interest rate. Okay, it's now it's not so much. So one of the big losers today are going to be the Morgan Stanleys. So we're going to short Morgan Stanley. We're going to short JPM. Okay, we're going to see as those gap and go down. So I'm not going to do my list. There's a lot of shorts in there. We're going to watch for 5-minute low breaks. We're going to watch to see if the market starts to fade at all. And if the market does fade, we're going to short into the declining moving averages. I will draw you a 2-second picture because I like drawing pictures. Okay? If the broader market looks like this, okay, whether it's like this, and we gap down, at the worst, we hit into the moving averages and go down. Okay, meaning that the moving averages, which will be curling in here, okay, we're going to wait till they get back to the moving averages on the intraday, and then we'll short as the trend direction will be down. So even any short-term fade up will be seconded, it would be followed by a secondary fade move down. So guys, that's what we're going to watch and play today. I think banks are my top short watches. And let's go out there and make some money. Anybody who's interested in joining the Legends of Wall Street Trading Room, there's going to be a link. We have a beautiful landing page. We are looking for new members. We are looking for new traders. We have been doing phenomenally well in all this. Come join us. Trade well, everybody.